Hatem Dhiab from Gerber Kawasaki joins us now. Hatem, a little bit of a tech tumble. Your thoughts, particularly as we saw that disappointment from the Google parent Alphabet?
Oh, hey, Juliet, how are you? Yeah, I think Wall Street is kind of a glass half empty this week. I think the earnings actually were pretty strong, but analysts and investors were very gloomy and really did not like some of the stuff they saw with Google.
Okay, well, it has been very, very interesting in terms of what we've seen from some of these big techs. As you say, they're having a bit of a hard time to power the overall markets. But if you think about it, the Magnificent Seven has been powering us for quite some time.
Yeah, I think when you are already called magnificent, right? There is only one way to go, which is down. Unfortunately, the expectations going into this earnings session were so high, and Google actually delivered. They have some earnings growth was very strong. They had a beat on their bottom line. I think what investors were focused on is the fact that their cloud business did not grow as much, or at least they have decelerating growth in that sense. And actually, what you've seen from Sundar there is a bit of a lack of the focus. Google is more of a show me story now with AI versus Microsoft, which is delivering quite well.
In terms of what we've seen from some of the other tech players as well, it was really interesting with Meta talking and pointing to that ad revenue. I mean, this used to be the key driver for a lot of these tech players. Now we're focusing more on AI and cloud. Just what did you glean from what we heard from the Facebook parent?
Well, I mean, Facebook was down despite having a really fantastic print. I mean, they were up, their operating margins were up 40%. Their free cash flow, it was $13 billion. Those numbers were insane. But also that's driven by a lot of cost cutting over the last year or so. I think their headcount is down 25%. And I think advertising is still strong, and obviously they're doing a lot of AI work. So Zuckerberg kind of said all the right things on the call, and yet the stock was still down, basically because investors are so picky.
Well, investors always want more. We know that, don't we, Hatem? You touched there on the job cuts. What kind of further projections are we seeing in terms of some of the calls from CEOs or the board after these earnings in terms of what we could see in terms of consolidation for the tech sector in 2024?
Well, last year was really tough with headcounts really being cut all across the board. But I think that's over for now. I mean, we haven't seen a lot of new jobs per se, but I don't think a lot of these tech companies are cutting a lot of jobs, and simply because business is not that bad. I think the reality is there's anxiety with the macroeconomy, with how things are going to unfold over the next 12 or 18 months. So there is not a lot of hiring happening, but also I don't think they're trying to cut any more jobs.
We are looking very closely at AI, which we have touched on, and this is something that analysts are looking for in terms of guidance from every company, not just in the tech space. But what took your eye, or caught your eye, should I say, particularly when we heard from Amazon and in its focus on AI?
Well, I think, last few quarters, AI was like this shiny object, this disco ball that everyone was talking about. I think now there is a little bit more realism. Who's really benefiting? Who's making money? How much is this costing? So there is a lot more discipline around what AI means and who's really benefiting from it. So with Amazon, for example, we've seen that AWS is really starting to stabilize. We've seen revenue growth there going down, and what Jassy spoke about in the conference call is how much AI driven conversations or things are happening within the cloud business, and I think that's what's going to probably provide more growth for AWS going forward.
So just talking about some of the overall valuations, and as you say, if you're called magnificent, it's kind of hard to go much further. But do you think they are starting to look a little bit more normal after potentially a bit of a hard summer?
Yeah, absolutely. I think we're basically we're hitting the lows that we've seen in July or May of this year. I think Facebook has a 15 forward PE. Google 19 forward PE. So these are very, very low valuation for companies that are growing 20% plus top line and EPS in the 30s and 40%. So I think finally valuations are coming down. And if we want this market to go up, you have to have these large tech companies, which are basically 30% of the S&P, to really participate. So I think if that doesn't happen, we won't see this market go up.
We still have Nvidia coming through, I believe, in November. Any sort of thoughts on what we can see from Nvidia?
Yeah, it's a very good question. Nvidia is basically, I think, it's the picks and shovels for AI, right? And if you've seen under the hood with all these big tech companies, a lot of capex spending is happening and accelerating for Microsoft, for Google, and so forth. And I think all that money is going towards building these AI capabilities, and Nvidia is really one of the biggest benefactors from that. So I think Nvidia guided very high for this quarter, and obviously there's a lot of high expectation going into it, and I think they're going to deliver.